Hi guys, this is Growth FX speaking, the founder of Growth FX. So guys, the main reason behind this channel is that I'm actually documenting my journey of how far I have come with my trading, cause I've been trading for almost I think 3 to 4 years right now. And yeah, I've been trading with the same strategy throughout all those years, but then I started taking it serious only after a year. Then that's when I started trading with the Falcon method. So guys, I just wanted to update y'all with the trade that I actually discussed with on the channel. I think it was EURUSD. If you can look at the previous video, then you're going to see which one I'm talking about. So I actually analyzed this from the weekly time frame, and this is actually a trade recap of what I actually did the following the day before the trade. You understand? So, and tomorrow I will be dropping a market breakdown of consisting of maybe I think 3 pairs or 5 pairs, depending on depending on how the market will be this week. So yeah, let's just jump into this trade and see how we managed to catch on it. So as I've said, I started analyzing on the weekly, now on the daily time frame, and you can see that on the daily time frame we had an important area. Whereas if you can look at this was a area of value, meaning that this is where people were caught at the wrong side of the structures. They thought that maybe the market will push up, maybe from continuation, then push up, whereas this is possible. We are not actually contradicting this, but what we are saying is that this is actually possible because of how the market will be moving. So we did manage to see these areas over here. We had our first touch, second point, then our third point, whereas every third touch of the structure has a high probability of actually going up or down. Whereas if we have an ascending pattern like this, which consists of 3 touches like this one, then this has a high probability of doing what? This has a high probability of actually going down. Meaning, if structure, let's say for example, if we were moving in a downward trend like this, and we had our third touch like this, let's say, please bear with me on this drawing too, and let's say we had our third touch. Now, we were not going to look for what? We were not going to look for selling opportunities. We were going to look for what? We were going to look for buying opportunities. But then we have to be left on what happened previously. Because here, if I can look left, I can see, let me just erase this. I just like trading on a clean chart. So if you can go back on our left hand side, you can see that we had what? We had this as a point of interest, meaning that this is where I think orders were getting filled. This is where now buyers, people who were buying, started executing their trades. They were now taking their profits. So it happened that when the market came to this area, we pushed back down. And what I like about this push down is that it gave me clarity after it gave me this first flag over here. But if you can move to the smaller time frames, you're going to see this is actually the first flag that we had. Right. So let me move to the 4 hour so that we can have it, so that we can see price in a more larger scale. So moving to the 4 hour time frame, this is where the price action is being applied. This is where we need to start thinking, okay, if the market is moving in this kind of a manner, what am I thinking as a trader? Because trading mainly is mostly about psychology. Like, for example, the way we react when we are in a trade, or the way we respond when we miss a trade, things like FOMO and many more. So it happened already. I missed this trade over here, and I was not actually offended by the market or against this trade, because I knew that there were more opportunities along the way. Because if the market was around these areas over here, and I was to actually place a trade around, let's say I was to actually place a trade around here, because actually I could have been looking for a while. I could have looked for this entry over here, because we can see that we formed a bear flag. So this is where I could have taken the trade, but then I missed. Please bear with me, guys. My internet connection is still showing me flames, but then we're still going to push. Nothing has to stop us from doing whatever that we want to achieve. Whatever that we set our mind to, we have to achieve it. So I missed the trade, and I did not actually feel FOMO, or actually the market is going without me, or the market is actually giving people profits and I'm not there. I actually viewed it. I actually viewed it as like a stream of many opportunities, whereby if I miss this train, I know that the next train will still come. So I missed this trade. Then when I came back, it was around here, because I was actually busy, and it was actually around this area over here. So I was like, okay, I'm now not in the trade, which means that I have to look for another opportunity. So I moved to gold. I'll actually show you the gold trade, by the way. And I moved to gold, and I came back on this one. So when I came back again, I think it was around, I don't remember quite well, but then it was between Wednesday or Tuesday. Then I spotted this move over here. Then I took a trade here, as you can see. And what I like about this one was that it actually gave me confirmation. Because if you can look, we've been moving in a series of impulse and corrections. If you can look, this was an impulse, correction, impulse, correction, impulse. Then we have an overall impulsive phase. By what? Let me just do this. We have an impulse, corrective structure, impulsive move, corrective structure. We are now on an impulsive move. We are in a what? We are in a I can, yeah, we are in a corrective phase, by the way, signaling impulsive phase. So if I can just move down again, and once again go to the 1 hour. So when I get to the 1 hour time frame, this is where the magic happened. So I actually protected some profits. I think it's 1%. No, it's not 1%, but roughly around these areas over here. Yeah, I think it's around these areas over here, because I'm actually trading a smaller account, and I wanna grow the skill. I actually want to grow the skill in a way whereby I take trades flawlessly. You get what I'm saying? So the reason being, for me having a smaller account, it's like it's around my 200 rand account. So I'm actually pushing that account, but I'm not obsessed about the money, but I'm more obsessed about the percentages that I will be making. Because if you can look around here, what we have, once we get to these areas over here, I think we'll be running around about 2%, and 2% is something, because I was risking what? I only had my stop at what? 0.31%. I was targeting what? I was targeting I think from a 4%, I'd say. I'm actually targeting 5%, 5.7. Percentage wise, I'm targeting 1.76%. Imagine, you get what I'm saying? The more we risk, the more we actually embrace the fear of losing money with calculated risk, is the more our trading will become easier. Because the moment I start to put a stop loss, it means I have already accepted that I don't know anything about the market. It means I don't need to know what's going to happen next for me to make money. I don't actually have to have that scarcity mindset where okay, the market is going to go up and do this and this. However, if the market was not going to go in our direction, then why did we have the stop loss? Alright. So this is why they always say trading is a game of probabilities, and we have to actually respect that. You get what I'm saying? So we are currently running around 1%, and I'm targeting 5% or 1.76%, and so far so good. I've already off risk on this trade, meaning that whatever amount that I was risking, I'm now off it. I'm now on a risk-free trade. I'm not playing with the profits, but I have protected my profits. You get what I'm saying? So the more we push down, is the more I do what? Is the more I actually take my stop loss down, meaning that now my stop is around these areas over here, then which means once we pass this area, then I will actually move it down again, maybe around these areas once we actually tackle it. And yeah, this is how the trade went by. We are still inside the trade, and let's move to gold. But I did not actually analyze gold. I did analyze gold, but I did not share it on the group. So this is what I actually have on gold, but I won't actually be discussing a lot. I'll be talking about it more tomorrow on the market breakdown, because gold is actually one of those it's actually one of those, I don't know if I can say it's a pair or a metal, but it's a metal, but I can say, or it's one of those metals that I actually like trading, and in most of the times it respects the edge. You get what I'm saying? It actually fits with the strategy. It actually fits with the edge that I'm using right now. So if you can look here, we actually having what, the very same thing over and over again. We are trapping people, then we sell off. Now we are in a corrective structure. We can be going to these areas, then for push down. So on gold, there's not much to be shared. I'll actually be sharing a lot tomorrow on the SMB, on the Sunday market breakdown. Then yeah guys, this is what I'll be talking more about on gold. So if you want more videos of this, maybe something like a day in a life of how I actually approach the markets when I trade, you can just comment below. And if you want more videos of the way that I trade, you can comment and like, subscribe, and yeah man, see you tomorrow on the Sunday breakdown. Cheers guys.